Good small caps companies continue to grow over time during normal and extraordinary times like a pandemic. The key in stock picking is to select companies with good management. In normal times, the company will definitely grow better than peers. In challenging times, it is very crucial that the management know how to protect the business and the stakeholders. In the last 10 years, some of our stocks have grown out of the small cap category to become mid cap and large cap stocks. We have a few stocks that we bought many years ago and still growing strongly. There will be occasionally periods of underperformance for these stocks, but they will emerge stronger when the cycle turns up. The COVID-19 pandemic was extremely challenging as all companies have not experienced this before. Pandemic wasn't a risk that was in the risk assessments of most companies. Interestingly, it gave us a rare chance to test the resiliency of many companies' business models. Those with strong balance sheet gained market share and emerged stronger after the pandemic. It was heartening to see that some companies registered record profit in 2021 and should be doing better into 2022. I would say some of the stock prices have not reflected this due to the poor market sentiment currently amid high inflationary environment, Russia-Ukraine war and COVID-19 lockdown in China. We did not change our investment style over the past decade. We keep investing simple by buying undervalued stocks with good management, good business model and strong balance sheet. I would say the biggest change that we had was to incorporate ESG into our investment process. We are stepping up our engagement with small cap managements in area of environmental, social and governance. Before this, we were mostly focused on the governance and social issues, but now we put equal importance to the environmental aspect of the business as well. Good small cap companies will definitely outperform inflation. Companies with strong pricing power will be able to pass on higher costs to clients and protect their profit margins. In return, shareholders should be rewarded by dividends and capital appreciation. Equities is a good choice to hedge for inflation. Stay invested in quality stocks and average down if the opportunity arises. Don't place all your bets at once. Don't hesitate to cut loss if conditions change unfavorable. Stay away from business models that you don't understand and keeps you awake at night. Overall, we are optimistic on the longer-term outlook for the small-cap firms which are recovering from COVID-19 pandemic. Apart from commodity stocks which have run up lately, most small-cap companies are still trading at cheap valuations. They are so cheap that liquidity has dried up, as no sellers are willing to sell anymore at these distress levels. Problem is that it takes time to accumulate positions. We like the reopening themes as borders reopen and consumers start to spend again. We also like businesses that does export business that will benefit from weaker ringgit. COVID-19 has set us back for 2 years, and 2022 should be a new beginning for us. High commodity prices are good for Malaysia. With borders reopening, foreign workers can come in again to ease the staff shortage problem. Revival of tourism should help the hospitality and services sector. Consumer spending should remain strong, as shown by strong property and car sales. Post-COVID-19, manufacturing companies are accelerating automation and digitalization of their production process to reduce manpower requirement. During COVID-19, Malaysia was highlighted as a key R&D hub globally. Our companies received a lot of queries thereafter. Over the recent years, big MNCs have announced plans to set up new plants in Malaysia due to our entrenched and strong supply chain, particularly in the E&E sector. The spillover effects from these massive FDIs are expected to immensely benefit local businesses over the longer term.